And in our business stories, housing rents in Dubai fell during the final quarter of 2016 and look set to come under further pressure this year. According to property broker Esteco, average apartment rents in Dubai fell by 5% in the final 3 months and ended the year an average of 6% lower than at the start of the year. The broker reported that rents for one-bedroom flats in most areas of Dubai had fallen by between 5,000 and 15,000 dirhams during the year. It said rents for one-bedroom flats in Jumeirah Lakes Towers were subject to some of the biggest falls, slipping by 16.6% to 75,000 dirhams. Average rents for one-bedroom apartments in International City fell by 10% to 45,000 dirhams. In Jumeirah Beach Residence, they fell by an average of 8.6%, declining to 105,000 dirhams for the year. In Business Bay, average rents fell by 8.6%, dipping to 85,000 dirhams a year. In Dubai Marina, they dropped by 8.1% to 90,000 dirhams. And in DIFC, they slipped by 7% to 105,000 dirhams. Esteco added that villa rents in Dubai fell also by 3% during the quarter and by 5% compared with the start of 2016. According to the real estate consultancy firm, housing rents in Dubai could continue to come under pressure as developers across the city plan to complete another 31,500 apartments and 12,500 villas and townhouses this year. In general, property brokers have been divided in their views as to whether the Dubai property market will pick up again this year after 2 years of falling prices. Optimists say that Dubai government infrastructure spending ahead of Expo 2020 is likely to boost job numbers and economic growth this year, pushing house prices up. However, some real estate experts predict further falls in prices this year owing to a strong US dollar, an expected increase in interest rates and slow economic growth. DAMAC Properties has announced its financial results for 2016, reporting an 18% decrease in net profits for the full year when compared to its results for 2015. During the year, the Dubai-based developer recorded revenues of 7.16 billion dirhams, down from 8.54 billion dirhams in 2015. Profits for the full year stood at 3.69 billion dirhams, down from the 4.51 billion dirhams it took home the previous year. DAMAC completed over 1,600 units last year in its DAMAC Hills development, with the developer's total deliveries for the year reaching over 2,400 units. During 2016, its booked sales reached 7.05 billion dirhams, with 1.71 billion dirhams in Q4, a slight increase of 1.4%. Commenting on the company's performance, Hossein Sajwani, the chairman of DAMAC, stated that the real estate market in Dubai had begun to stabilize, adding that while there is demand for quality real estate, the market's conditions remains challenging, with customers seeking better value. The chairman of DAMAC concluded in a statement that DAMAC's medium to long-term outlook remains positive, with the company well positioned to navigate the conditions ahead. The company's board of directors has proposed a cash dividend of 0.25 dirhams per share, amounting to 1,512.5 million dirhams, which is subject to the approval of its shareholders. Aldar Properties has announced a net profit of 2.8 billion dirhams for the financial year ending 31st December 2016, up 8% from 2.6 billion dirhams in 2015. Underlining Aldar's commitment to returning capital to shareholders, the company has proposed an 11 fils per share dividend for 2016, up from 10 fils per share in 2015. Commenting on the results, Mohammed Khalifa Al Mubarak, CEO of Aldar Properties, stated that the company has enjoyed a solid year in terms of their underlying financial performance and delivery against their strategic goals. Their business continues to mature and their diverse and robust assets have delivered consistent returns through natural market cycles. Aldar's development sales value increased 17% to 3.5 billion dirhams in 2016. Regarding the asset management portfolio, despite a softer operating environment, the company achieved their target of 1.6 billion dirhams recurring revenue net operating income. Al-Mubarak added that in 2017, we intend to focus on the opportunities presented by the growing demand for mid-market products in our development business. As for the asset management side, we remain fixed on our long-term growth targets, which will be achieved through our 3 billion dirham investment program. The merger of the National Bank of Abu Dhabi and First Gulf Bank will be official from the 1st of April, with shares in the new company trading from the next day. Emirates news agency WAM reported that the Abu Dhabi Securities Exchange had completed its procedures for the unification of the records of the shareholders or stakeholders in both banks. The indicative market price of the new shares will be calculated based on the latest traded price of the shares of both banks in the market before the merger, with shareholders of the two banks having endorsed the merger during a General Assembly held in December. The total assets of the two banks is estimated at 665.8 billion dirhams, the equivalent of $181 billion at the end of 2016. Financial statements show combined deposits of 402.58 billion dirhams and combined loans of 357.2 billion dirhams. The merger will lead to the creation of the largest banking entity in the Middle East and may encourage more mergers in the banking sector in the UAE.